Hello, welcome to McBoss Capital. My name is Michael Chu. You can reach us at this email here. And today, this is our first recording for the new year 2022. And we'll get started. All materials shown here are for informational purpose only. They're not recommendations. As usual, our videos talk about focusing on sharpening your skills, what to buy, when to buy, when to hold, when to sell, looking at the general market direction and diving down to the industry sectors, and then finally the stocks. Before we look at the current market, I just want to talk a little bit about my post-analysis and reflection in throughout last year, and mostly near the end of the year. We're currently 2 weeks into the new year. Most people probably were aware growth stocks are having a hard time right now. It hasn't really found its bottom yet, although there are some subtle signs in the last week that show that it could rebound from a heavy selling in the morning and close higher by the end of the day. So those are little signs that maybe the selling is starting to subside. At least there's more potential buyers than sellers, but it's still too early to say whether we have hit a bottom. So right now the environment is currently in a risk-off environment. The 200-day seems to be still, the 200-day moving average seems to be still in support for NASDAQ, but many growth stocks, especially ones that have done well since the pandemic, are mostly down easily 40 to 50%, or even some are down a lot more. And you probably hear a lot of media talking about ARK Fund, how I think they're close to 50% drawdown right now. It's very hard time for growth investors, and we haven't really hit the bottom. At least there's no clear sign that we have. So it's very important to stay in tune with the market. I'm sure many people might have been holding the stocks that they have, especially if you're holding growth stocks during the downtrend. It could be really hard on your portfolio. And for some of you, including myself, I have bought some growth stocks as it was going down. Perhaps it's not a very good strategy, because you will suffer a drawdown in your portfolio, because at least at this moment as it goes down, it's probably a mistake that I shouldn't have made. You should always follow the market trend. Even if you are averaging down, it could draw down your portfolio, and you don't really want that ever, because you want to protect your capital and buy it on an uptrend and follow the market, right? So that's very important. Just want to stress on that. Right now we have no idea how far the market will continue to draw down on growth stocks. It's like catching a falling knife. It's gonna hurt you. Even you can catch it, and you just don't know how far it will go. And it could, basically you are risking your capital, and it's better to, even if you you only invest in growth stocks, it's better to sit on cash at this moment. So just reiterate, our strategy is to focus on accumulation and distribution strategy. You should look at what's being accumulated and distributed in the marketplace to follow the market trend. Right now, as we all know, we are going to be entering an interest rate hiking environment. What have done well so far this year are energy and financial stocks, which have been under accumulation in the inflationary environment. Growth stocks with high PE and multiples evaluation have been decompressing because of this possible most likely interest rate hike environment, and we'll talk a little bit more about that in a second. S&P is holding up and doing great, but NASDAQ and Russell are near the bottom, and Dow is in the middle of the performance. So we are on investors.com right now. For current market, it is currently under pressure, which is a signal that investors.com gave out, which means you know, it has to be cautious in terms of the type of stocks you're buying, and there's still a lot of risks, and so it's not ideal for, especially for growth stocks investors. If we go to macbosscapital.com, you'll find our latest article here. The market continue with the inflation tolerant stocks right now, which is mainly the energy sector, and some financials. They're holding up, but this week they gave up some ground after some of the major banks you know, fell. But overall, we are seeing mostly you know, dividend and type of stocks, you know, that are more in favor. This week we suffer some losses again, but the losses are much smaller compared to the first week of the year. So we have huge inflation right now based on the CPI, which hit a multi-decade high. It continued to push investors towards dividend inflation hedge stocks, such as in the energy sector and as I mentioned, financials. Nasdaq currently bounced off its 200 days moving average for the second time. Look for support. So if we go to Nasdaq right here, you can see this is the black line is a 200-day. It has bounced for the second time in the same week, which is a really good sign in terms of support. So we just want to continue to watch that, and of course it's below all its short-term moving average right now. So it's basically stuck in this range right now. So it'll be important to see how probably earnings results will determine which direction it's going to go, whether it will continue to bounce up from here or whether it will continue to slide below this 200-day, which will be a huge signal for potential further downtrend. For S&P, it is fell below its 50-day moving average and trying to find support. So let's take a quick look. So right here you can see it's leaving below the red line. That's the 50 days. However, you can see that it has been hitting higher lows, and if you draw a trend line along those lows, even as far back as here, you can see the support line right there, right? So this is really good sign so far. It's finding support at the lower trend line here. So we're hoping that it could bounce this week above this short-term, this 50 days moving average. That'll be a really good sign. So Dow Jones Industrial Average trying to hold near its 50 days moving average. You can see that this, again, this is red line is the 50-day. It's just sitting right above it. So so that's been tested twice now. Although it's still very near it, you know, we really want to see it, you know, bounce off as soon as possible. The longer it takes it for it to bounce off, the higher the risk it will fall below. Then possibly the next trend line will be the 200-day, which is not that far off it. So it's possible that it could fall to this line and even further beyond. The other thing I want to show is that you know, you can also draw another trend line here, and you can see that it's still above this low trend line, which could be a good thing. So again, we're looking forward to it to bounce off here. So right now Russell 2000 is probably you know, looking very weak right now. It is obviously below its 10, 21 days and 50 days, and the characteristics at least right now have deteriorated. So we look at right here, it is below all the moving averages, right? And if we draw a trend line near the bottom of the previous lows, they're sitting right here. It did bounce off it on Friday. So again, they're sitting really close to this trend line here. If it does fall below that support line, we could see a further downtrend going down. So again, same as other index, we really want to see a strong bounce this week as soon as possible. Otherwise, you know, some investors might start to give up on this short-term trend here. We're going to look at the current accumulation distribution for this week. We see there's 54 groups, industry groups that are being accumulated and 61 that are distributed. So it's roughly even, slightly more distribution than accumulation. Out of those stocks we follow, 250 were being accumulated and 320 are being distributed. So it continued to be more selling than buying at this moment. And we can see here which groups are doing better. The technology definitely, we see some strength in the semiconductor, but it's still not that strong. Retail, there's some in television services like this Discovery, and tobacco right here. We definitely seeing a lot of strength in the energy sector, which we'll go over in a second. And the financials are most, there's some accumulation, and then a lot of them are just holding up where they are right now. And then there's many areas that are considered being under distribution. Here's a chart that charts the S&P SPDR sectors. So year to date, we are seeing energy outperforming by far. You can see here is at 16% gain since the beginning of the year. We have financial sector coming in second. Again, this week it did pull back a bit. So now it's sitting at 4% gain. And then the rest of the sectors, including technologies, are right down here. SLCA, they're not doing that well. Even the real estate are not doing that well right here. And so really, energy is just dominating, and financial in second place. We're just going to start diving into some industry groups here, starting from the tech ones. Right now, the software enterprise group, you can see this downtrend is quite severe. If we draw this trend line, it looks like that, and it has broken pretty much all the previous lows right here in the last year. So it goes as far back as September 20. So we don't know how much more it will go down. It's really scary. I think most investors who are holding tech stocks, most tech stocks are really under huge distribution. It's truly a bear market, from my point of view. It's really hard for anyone who's in those stocks right now. We continue to gaming stocks. Again, we're going to see this very similar pattern. It just continued to be under the 50-day moving average, and it's trending downwards. Security, software security, which is a very strong group before, now has fallen also below the 200-day moving average, the black line. So that's also a very negative technical trade. Computer services, this includes like IBM and so forth. You can see it's also starting to fall below the 200-day, which is 200-day is considered a long-term support area, which now has been broken. So it's starting to look more bearish. So something to watch out for. The semiconductor group, probably they're doing pretty okay. In fact, you can see so far, the last 2 weeks it's been holding up, and it's near a new high, which is a good sign. So there is a flavor for semiconductors, just probably because the whole industry is just lacking the demand. There's so much demand for for the chips and stuff right now. So which is a good sign. This could signify that tech area could usually this is a precursor to the tech area. It could be a good sign for growth stocks to come. So let's see how that goes. This is the manufacturing group. Similar, is holding up pretty well. So auto manufacturer, which include like Tesla and including Ford, they're doing pretty okay. They're holding up really well, sitting near the 50-day moving average. So it's a good sign for car manufacturers. Aerospace defense, these are the big industrials, and they're doing really well. Actually, you can see that it's climbing up 4 weeks in a row. And so that could be again, investors looking for dividend. Those are mostly dividend stocks and stuff. we're hitting the commodities and energy sector right now, and you see that chemicals, agriculture are doing really well. It's hitting new high right now, and it bounced off the 50-day. Really good sign. Energy coal also doing well, moving up many weeks in a row. So seems to, and so now we're hitting the oil and gas sector, which this is a Canadian, include ERF, CNQ, doing really well right now, hitting news highs. So lots of strength. And this one's oil and gas field service, includes Schlumberger, Halliburton. Again, same idea. Integrated, same idea. Refining, marketing, doing well, and transport pipeline as well. So now we're hitting the financial, which includes banks and regional banks. So this one is still under accumulation. Like I said, there's many banks group, and they're mostly in hold pattern last week. Some of them sell off, and but majority of them are in holding pattern, which may be a good sign that they will continue their run as well. Building residential got some good earnings report from one of the companies, and it bounced back pretty hard. So this last week, so it may be a good sign that it could continue its uptrend here, because this was the uptrend and then it pulls back, and now it could continue upward. Some of the stocks that are doing really well that we are following includes, so this one is US Silica in the chemical specialty group. So we will look at the daily chart right now and see what it has done recently. So you can see the bottom was right here, and it has been climbing up in the uptrend, just broke above this trend line, this buy point right here. So hopefully there's more room to go. Schlumberger, which we talked about earlier, is also doing really well from this side. It's climbing up this 10 days moving average nicely. WTI also doing really well. So a lot of these are in the energy group. Carnival in the leisure service group, also climbing up the right side of the base, and it's riding along the trend line really nice. So there might be more potential here. Discovery, which have some good news in terms of partnership and stuff. So I think they're starting to show a more bullish pattern here. As you can see, it found support also near this 10-day moving average. Canadian natural resource, the Canadian one. So this one is doing really rising really fast. It's almost near 20% profit already from this this buyout breakpoint. Popular, it's a regional bank, also climbing up nicely. GKOS, a medical products group. So this one just starting to move on the right side. So Halliburton, another oil field service group, doing really well. MT Bank, doing really well as well. Regional bank. CBR Energy, also doing really well. It's near breakout point right here, the traditional breakout point. GLNG, which is doing really well. PXD, UX Exploration. So a lot of the energy groups, you can see they're just really on a tear right now, like this. It's like on a 10-day run, just really strong. BP, probably a much bigger producer, integrated producer. Here you go, just broken out recently. It's now just continue to go upward. That's pretty much it in terms of some of the top stocks we follow. Hope you enjoyed this video. If you like us, subscribe to us. Feel free to email us at any time. And we have some course here at Teachable that you can learn something new. Thank you for following us. Thank you.